exporting countries is expected to recommend a 9-month extension to an agreement that expires in June. CNBC's Steve Sedgwick reports from Vienna.
Less than 24 hours to go before the start of a key OPEC meeting, a meeting, of course, which will also be attended by non-OPEC allies, including the likes of the Russian oil minister, Alexander Novak. The aim, of course, is to rebalance the market. The aim of OPEC is to reduce the inventory overhang they believe is potentially damaging for the market in the longer term. They want a little bit more balance in the market, potentially, and they think their strategy is working. The problem is it's working slightly slower than they had expected. Perhaps because of less demand than they expected from certain countries, including Germany, Japan and India. Perhaps because of resurgent shale production in the United States. And perhaps because in the early stages, perhaps a little bit less compliance than they would have hoped for from some members, including the likes of UAE and Iraq. But they think they're back on track now. They think they've got full compliance from their members and indeed their allies. And what they're hoping for is that if they extend the current production deal, perhaps by another 9 months, and that appears to be where all the smart money is going at the moment, then they can rebalance the market and take away a lot of that overhang in the form of inventory, which is trading way above the 5-year averages by perhaps as much as 300 million barrels. So looking forward to the key meeting on Thursday. I've spoken to various ministers in the last 24 hours, including key members from Iran and Iraq, and they both seemed very happy when I spoke to them about extending by a 9-month period, not actually as excited potentially about cutting even further, which would really be a rabbit out of the hat if Saudi were to get that from the broader OPEC grouping as well. So at the moment it looks like an extension of 9 months of the 1.8 million barrels a day cuts that was agreed back in November is where all the money is going. This is Steve Sedgwick for CNBC at OPEC in Vienna.